I'm going to be going over market structure. Market structure is probably one of the most important parts and elements of trading. If you can understand market structure and you removed everything else we were using for trades, for setups, for entries, and all that, you could still have a good idea and a good chance of actually taking trades. If you removed everything off the charts and there was nothing but and you understood nothing but market structure, you would be able to understand, when you could potentially have trades. So it's one of the most important, if not the most important things. I feel like market structure is definitely the foundation of trading, at least this style. If you know how to, use market structure, then you can pretty much understand the market entirely on its own, visually and conceptually, just by looking at it. So yeah, this is probably the first thing that I'm going to teach in every single course, every single class is always going to be market structure. It's not too complex, but once you do start to understand it with everything that I'm showing you, you have to just practice. Just make sure you practice and take your time with learning how to go about applying it, using it, seeing it, identifying it. Once you get that down, you're pretty much good. So let's just go ahead and get right into this video. Like I said, structure is very important, but it's also very simple. Okay. So what is structure? So what I mean by structure is when you're looking at the market, okay, and you're just looking at the general market, you can always see whether or not the market's flowing upwards or downwards. Is the market going up or is it going down? Basic concept of the market, right? So like maybe in this area, or we'll start down here, okay? Market was kind of moving a little bit sideways, right? Kind of moving sideways, then it went up a little bit sideways, then it came down a little bit. Then it went up, a little bit of sideways, kind of going up, okay? Then it went sideways here in this area, and then it went up, okay? As the market's going up, it's in an uptrend, right? It's in a bullish market, it's going up. As it's going down, it's in a bearish market, it's going downward. To understand structure, you have to understand higher highs, or high points, low points, higher lows, and higher highs, okay? So what I mean by that is, let's just say the market's doing this, okay? I'm gonna be doing a lot of drawing on this video. I might make a part 2 just for actual chart work for structure, but right now I'm just gonna stick to just drawing so you guys can see this. I feel like this is the easiest way for you to understand it. Just being able to draw out structure is the first thing you gotta understand. And I think this is probably a better way for you to get a good grasp as to how to see structure, okay? So on a blank canvas, structure, right? Let's just say the market was going up, okay? All in here, what's happening in the market is you're getting these high points and these low points, right? These high points and these low points. These high points and these low points. These high points and these low points, okay? So what's happening here? As the market's going up, like in an uptrend, you're getting higher highs and higher lows. Why? Because, so let's just say higher high right here. I'll identify these. We have higher high right there, higher high right there, higher high right there. Okay, so you're getting higher highs, and then you're also getting higher lows, okay? Higher low. Okay, so what's happening in these moments is the reason why these are like a higher high, it's considered a higher high because it's higher than the previous high. Okay, so the market came up, made a high, made a low, right? Then it came up and made a new high, so it's a higher high, and it made a higher low. The market came down, got to this low point, and then it came back up, but it was higher than this low. So you're having higher highs, higher lows. This higher high is higher than this higher high, so this is the new high or the higher high. This higher low right here is higher than the higher low, so you're having a new higher low, and the process just repeats itself. When you're in a bullish market or an uptrend, this is what the market looks like, okay? This is what you're seeing. You're in a bullish market or an uptrend. So you have the market's doing this, it's moving up in an uptrend, right? The market's going up. It's in a bullish market, it's in an uptrend. That's one way you can help decide to determine structure as far as just looking at it. The second thing you want to be looking at is the market breaking out of these resistance levels, okay? So remember, resistance versus support, always like this. So say we have, let's just say we have, let's try right here, right? So essentially the top of the mountain, right? The mountain peaks are the resistance levels. The valleys are the support levels, okay? So up here, I'll write this out here. Support levels are down here, and then resistance levels are at the very top, okay? Some people call it the roof or the floor. Either way, you can say whatever you like. The resistance levels and the support levels, okay? So right up here, this little random line will be drawn for like a resistance level, and then same thing down here is like a support, okay? When you're dealing with structure, and right now I'm going to be sticking to the upward trending structure for this example. When you're dealing with structure, anytime a resistance is broken, that's a sign that you're moving into a bearish market. So the market came up, respected the resistance, made support, made resistance, made support, respected the resistance, respected the support. Let's just say it came down here, respected the resistance again, came back down, respected support. When it breaks through the resistance level like that, it broke through that resistance level, that's a confirmation that the market's in an uptrend, or it's moving into an uptrend, or it's continuing the upward trending pattern, okay? Anytime you see like a resistance level being broken, that in terms of market structure, that is a sign that the market is continuing its bullish momentum, its bullish move, okay? So what does that mean over here? Let me just pretend, I'll go ahead and draw this back here a little bit more. So it kind of looks like our example to the far right. Okay, so let's just pretend we have this right here, and the market, again, right here on this support level, or sorry, this resistance level right here. So we have our resistance up there, then we have our support down here, okay? And this is how it will look in the market too. Like this one's like, it's not gonna always be perfectly respecting off of it. We'll get into true breakouts and true respects and true fake outs and stuff like that. But for right now, it's not always gonna be perfect. So it might come down here and give a little bit, or go a little bit past that support and then come back up, and same thing here. So it's not always gonna be like a perfect bounce off of this. That's perfectly fine. But for the sake of this example, you'll see the market came up, created this resistance, created support, respected that area, that price point, respected the support down here, respect the resistance again, respect the support. So we want to see like where it's going to potentially be breaking out of. Finally, this market came out, broke out of the resistance level. So once the market breaks out of that resistance level, like right in here, once it broke out of that little area and it broke this resistance, the same way it's breaking this resistance, that's a sign in a bullish market that you're in an uptrend now, that you're moving into an uptrend, okay? So once you see that, or once you have that, at this particular point, you know that the market's now moving into like an upward trending market based upon structure alone. Remember, all the videos that I do and everything I touch on, for each specific video, I'm just sticking to that one thing. But there would be other things I'd be using to confirm the market's moving into like a bullish market or continuing the bullish market, etc. But for right now, just based upon structure, once this resistance level is broken, then you're good to go. You're at this particular point, you're good to go, okay? So it broke out of resistance and created a new high, okay? So this is like a higher high because it's higher than this previous high. So the market came up, created a high, created a low. Created the same high, same low. It kind of started consolidating in one little motion. Market's moving sideways, so we're waiting for like a breakout. Resistance, same high, same low area. Boom, market broke out of resistance, created a higher high, and then came down here, created a higher low, and kept rising. That is a sign that the market's in an uptrend now, okay? Broke out of resistance, created a new higher high, created a new higher low. The same process just repeats itself throughout the entire trend of the market. So then would look for another resistance level right here, which is right here. Same type of resistance at the top here. Remember, the mountain peaks and then the valleys. The peaks are resistance, the valleys are support. Or like I said, you could call it roof and floor if you'd like. Okay. So breakout right here. Market breaks out of resistance, creates a new higher high, new higher low, same concept. Seeing these, anytime you're in an uptrend and you see higher lows being created like this is always a sign of like bullish momentum, or that like buyers are in the market and this is giving you a lot of bullish pressure. So this is always, you can always use that as a sign to say that the market's moving in an uptrend, okay? Uptrending market. Market came up again, broke out of this resistance level, boom, broke out of again, created a new higher high, higher low, bam. Market came up again, broke out of this resistance level, created a new higher high right here, a new higher low, break out of that resistance, etc., etc. As long as the market's breaking out of these resistance levels right here, right here, right here, and creating higher lows, higher low, higher low, higher low, higher low, those are all signs of a bullish market, okay? So as far as structure is concerned, you should be able to see and you should be able to tell the bullish market or the market's in an uptrend purely based on structure when you start to see these things. Again, always remember, a break of resistance is a sign that the market's in an uptrend. Higher highs or higher lows being created is a sign that market's in the uptrend. And then continuous break of resistance, break of resistance, break of resistance, break of the roof, break of the roof, higher lows being created. This low is higher than this low, okay? It made a low, made a higher high compared to that high, made a new higher low compared to that low. It made a new high compared to this high, so this is the new higher high. Higher low, boom, etc., etc. As long as the market's doing that, you are in an uptrending market, okay? So now let's look at a downward trending market or sell positions, okay? So and that's the final point is, in this type of market, I would only be looking for buys, because why would I be trading against the trend? We'll get into counter trend trading later, but for the most part, when you're in a market like this and you're in a buy market, you want to be looking for like, okay, damn, buy. I caught the buy right there. Boom, market came up, came down. Okay, I caught a buy somewhere in here. Okay, I caught a buy going up. Market came up, came down. Ooh, okay, I caught another buy right here, etc., etc. Like, you're catching buys along this entire way. I'm not really looking to trade against the trend because it's in an uptrend. You know, the trend is your friend. Why would you go against the trend? So I don't really do a whole lot of counter trend trading. There are some scenarios where I may look at a counter trend trade potentially, but for the most part, I rarely take counter trend trades because it's not really like that, smart to me, and I don't really like doing it. But I mean, you can do it. We'll get into that later. But for right now, you're trading with the trend, okay? Now let's go look at some sells. So this is going to be okay. So that's an uptrending or bullish market, and I'll put it by this. Uptrending bullish market, and then we have okay, so now we're looking at sells, okay? So downward trending, so that's an upward trending bullish market, right? Higher highs and higher lows. Break of resistance, okay? The downward trending bearish market is the exact opposite concept, okay? So say we have the market trending downwards now, okay? The market's going down. We'll start with this type of example over here. Say the market's doing this, boom, 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 okay? So similar concept as before. Let's just say the market's in like a little channel and it's respecting these resistance levels, the mountain peaks, respecting these roofs, the roof, and then it's respecting the floor, right? The floor, the support, okay? So same exact concept as before, right? We're in a very similar channel right here. Okay, so the market's respecting it. It came down, and I'll start here. So the market was coming down. The market came down, made a low, lower high, a low, lower, so lower low, lower high, low, a high, And the reason why these two are just lows and highs because they're not lower than the previous lower high, and it's not lower than the lower low. So it's like lower low right here, lower high. Okay, so let me go ahead and just, I'll identify it over here on this side in a second. But you see, so it's coming down, respect support, respect resistance, respect support, respect resistance, respect support, respect resistance. Finally, it broke. Instead of breaking out of the resistance levels, see, last time we had the resistance level that was broken, and that confirms an uptrending market. Now we have a support level that's being broken. That confirms the break, the support level being broken confirms the downward trending market, okay? So you see the difference on the top when the market was trending upwards. We had the market trending up, and then it created this little channel, resistance, support, support, resistance, support. Then it broke out of the resistance. Now here it's coming down, support, resistance, support, resistance, support, resistance, boom, finally broke the support. Once it breaks that support in this area, you're like, okay, now I know that I'm looking to sell, or I'm in a bearish market. And up here when it broke the resistance, I was in a bullish market, okay? So let's go look at the example over here. So what we have here is the same concept, right? The market came down, came into a channel. Okay, so let's go ahead and identify these. Let me go ahead and just draw like a little bit of a support level or resistance level right here. Resistance level right here. Support level. Okay, so we have the market doing this right here. Lower low, lower high, lower low, lower high, okay? Because this low is lower than this low. This high is lower than this high, so that's a lower high and then a lower low. So I will identify both of those. Lower high, right here. And then this was a lower low. And now because they're in this channel and it's just popping off in this channel like back and forth, so lower low because it's lower than this low, a lower high because the next high that you saw was lower than the previous high, so that makes this a lower high. But then this is just still the low because it didn't break the lower low. This is still just the lower high because it didn't break the previous lower high, or it wasn't lower than the previous lower high. So then lower low or low high. And then finally, right here in this area, the market was broken. Okay, so right when the support was broken, this support level, it's a little bit bigger so we can see it better. Right when this level was broken, you now have a new. So first things first, the support level is broken. Right when you see a support level being broken, you know that now we're moving. We're either, if you already were in a bearish market and you were getting lower lows and lower highs, boom, break, lower low, lower high, lower low. If you were already getting that up in here, like if it looked like this prior to this area, say we had this and it already looked like boom, 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 and you were already getting lower low, lower high, lower low because it's lower than the previous low, lower high because it's lower than the previous high. If you were already seeing that and you were in a bearish market, and then the market began to consolidate right here, moving sideways, once it broke that support again, you would have said, okay, now I'm continuing the bearish trend. Or let's just say that this was a fresh market and you weren't really sure what the market was in, but once you saw this break of support, now you can confirm you are now for sure transitioned into a bearish market, okay? So what that means is right here, you have now a new lower low, and then a new lower high, because this lower high is lower than this lower high. This lower low is lower than this lower low, which was the low point. Okay, so these are all lower lows right here, or these are all lows, and these are all highs in this channel. Only reason why they're not a lower low or a lower high, again, is just because they didn't break out of the original lower high. But so now you have the market that created a new lower low, came down here, made a new lower low, came back up, made a new lower high, boom. And it started to have this type of pattern. So now you have another lower high, and another one down here. And then you had this lower low, or lower high, sorry. Where's that at? Go ahead and delete that real quick. Thought I copied this one. Okay. So the same concept exists, right? You have the break of the support, lower low, lower high. Now, that lower low created another support level. So once you have that support right here, you can draw it over. Boom. Market came down. The market came down and broke out of this support. So it broke another support, created a lower low and a lower high. All signs you're continuing the bearish market. The market came down, broke out of this support level now. Right here, it broke out of that support level. Change these colors or something different so we can not get confused with the colors. So the orange is where it's breaking out of these support levels. So again, just to recap, the market came up here, broke out of this support level. The market was bouncing, finally broke. Break of support, like I showed you over here, break of support is a sign for a bearish market. It broke support down here, lower low, lower high. Broke support again, lower low, lower high. Broke support again, created lower lows and lower highs. So that same concept exists the entire way, okay? Feel free to take a quick screenshot of this or something if you'd like, or press pause on the video and just look at this. You can even just press pause on this video before you continue, because we're about to get into the actual structure and look at the charts. So you might just take a little break here if you need. Press pause, study this for a quick second. I'm gonna go off cam for a quick second, grab some water, and then we'll hop into the actual applying this to the market. And real quickly, actually, before we do that, I'm gonna do one more thing. So just grab a screenshot of this real quick if you want. Actually, I'll do two. I'll do one each. So you can go ahead and go here. Grab a quick screenshot of that if you'd like. Okay, and then grab a quick screenshot of this. But also, before you do that, let me go ahead and just mark these areas off as well. I'm trying to just get just the seller's market. Move this out the way. Okay, grab a quick screenshot of that after this, and these are just lower highs. Remember, like I said, with the uptrending market, if you have the higher lows, if you have these higher lows being formed, that's a sign of bullish pressure. And if you have the lower highs being formed, that's a sign of seller's pressure, okay? So grab a quick screenshot of that, and then I'm gonna do one more thing in terms of drawing, and then we'll take a break and then hop on the actual market to show you how this works with the actual bar graph or bar chart, so. Okay, so next thing, the last thing I want to do is just show you like the transition of the market. So you understand now what a bullish market looks like with structure. You understand now what a bearish market looks like with structure. Now we're going to get into seeing like a transition in the market. Okay, so this is probably like the third phase. So I'll be like, okay, so transitioning market. So essentially, like this is how you just identify when the market's going from like a bullish move to a bearish move, a buyer's market to a seller's market. It's pretty simple, and the same rules apply. Okay, the same rules apply. So let's just say we had a market making higher high, higher low, higher high, higher low, higher highs, higher lows, higher highs, higher lows, higher highs, similar low, and then a lower high. Okay? So I'm just going to draw this out just to stay consistent. Okay? Okay, so we had the market came up, was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You're in a bullish market all in this range, okay? And just to confirm this, we're seeing a break of this resistance level, a break of this resistance level, a break of this resistance level. Remember, when the mountain peaks are being broken, you're going higher into the mountain. You're going higher into the mountain. As long as you're seeing mountain peaks being broken, you're going higher into the mountain. It's going up. It's a bullish market, okay? So we had a higher high, higher low. Remember, that's a sign of bullish pressure. Higher high was created, a break of resistance, higher high was created, and a higher low, sign of bullish pressure. Higher low, sign of bullish pressure. Higher highs, higher lows, signs of bullish pressure. So this entire run, we were getting higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. This is a complete sign of bullish pressure, okay? So then what happened was you had your first sign that the market may be transitioning into a bearish market. Why is that? Because you can see the market came up, created a higher high, broke out of that resistance, but then it came back down in an area, right? And then it came up, and then it came back down and created a lower high, okay? If you're in a bullish market and you see a lower high, this does not 100% mean that the market's about to transition to a bearish market, because the next thing that could happen is you could have this, and the market it made a lower high, right? But then it came back up, broke out of another resistance level and started making higher lows again, broke out of resistance and started making higher lows again, and continuing the uptrend, broke out of that resistance as well and continued the uptrend. That could happen. However, a lot of times when you see a lower high being created, once you were in a bullish market, a heavy bullish market, you're seeing a lower high being created. That is always a sign that there may be some sellers entering the market trying to push this market down. So kind of a head and shoulders formation here as well. But so what you're seeing here then is you have, again, resistance being broken, all these resistance levels being broken. The mountain peaks were being broken. It's going higher. You got higher than the mountain peaks, right? Higher lows and higher highs, higher high, higher low, higher high, higher low, higher high, low, lower high. Right when you saw this, put on alert. This market may be transitioning. So once I saw a lower high being created, the next thing I would want to do is see if the valley or the support level is going to be broken, okay? It's the next thing I want to see. So I'll change that to purple, okay? So the purple will be the support levels. The teal is going to be the resistance levels, okay? So now I have a lower high. Again, that's the first sign, because I was getting higher highs and higher lows the entire time. This is the first sign that the market may be tracing down into a bearish, potentially a bearish market, and sellers are taking control of this market. The same way I said up here when we're looking for sells, what has to happen for me to confirm that it's in a bearish market? you need to have a break of the support level, okay? You need to have the break of the support. In a bullish market, we're looking for breaks of those resistance levels and higher highs and higher lows. In the seller's market, we're looking for a break of that support level, lower lows and lower highs. So I would be waiting for this market to break out of this higher low, this resistance support level. So we have a lower high times a break of support equals bearish market. Okay. Conversely, equals bullish market, okay? So a higher low, so you have a higher low right here, times a break of the resistance. So you had a higher low created and it broke resistance. That's confirmation for a bullish market. You have a lower high times the break of support, a lower low, lower high, a lower high times a break of the support, bearish market. Lower low, lower high times break of support, bearish market. Lower low, lower high times break of support, bearish market. So that's a little tip you can write down, okay? So right here we have a lower high. That's the first thing we needed for this equation. Now we're just looking for the break of the support. Once we had the break of the support, we now have a lower low that was formed. Now lower high. Market came down, broke out of another support, lower low, lower high. Break of support, lower low, lower high was formed. Break of support, lower low, lower high. Stay organized with this. Break of support, continue bearish market. Break of the support, continue bearish market. Break of support, continue bearish market, okay? So again, you can screenshot this if you'd like. I'm just gonna identify the areas that were broken. So all along here, that area right there, it broke out of the resistance. It broke out of this resistance. It broke out here, higher high, higher low. Broke out of this resistance, higher high, higher low. Broke out of the resistance here, higher high, higher low. Broke out of resistance here, higher high, higher low, right? Came up, created a lower high, which is a sign of bearish pressure. And then we had the confirmation with the break to complete that equation. Lower high times break of support, bearish market. Lower low, lower high times break of support, bearish market. Lower low, lower high times break of support, bearish market. Lower low times lower high, or lower low, lower high times break of support, bearish market. Okay, and remember, as long as you're getting these lower lows and lower highs, these are all signs of bearish pressure. In this entire area, I'm looking for sell or buys on the uptrend. Once it transitions to a downtrend, I'm looking for sells. Okay. Now this final example, I'm not going to get too in depth. That was a bullish market to a bearish market. I'm not going to get super in depth. I'm just going to draw a bearish market into a bullish market down here. So lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, higher lows created. Okay, so I'll stop there real quick. I guess I'll keep it consistent. So lower low right there, lower low right here, lower low right here, right there. Okay, so we had lower lows, lower highs, lower low, lower high, break of support, break of support, break of support. Market came down. Market never broke another support level. This last support level, it did not break. It didn't break that support level. However, it created a higher low. So the same thing up here. The first higher low we saw up here, it was the first lower high, gave us signs that it might be in a bullish market. Down here, the first higher low we had, because in an upward trending bullish market, you have a bunch of higher lows, higher low, higher low. We saw that the market created a higher low, right? It came down, low, lower high, made a higher low, because this low is higher than the previous low. So that's a confirmation of a higher low. Same thing up here, like we talked about in the beginning. When you have a break of the resistance level in an uptrend, all these resistance level breaks, that's a sign of a bullish market. So down here, no different. We're now looking to see if this market's gonna break out of this resistance level. And remember the equation, right? For an uptrend, a higher low times a break of resistance equals a bullish market. So I'm just waiting to see if this market's gonna break out of this area. So we already have the first part of the equation, which was a higher low was created. Now the market's in this area, we're waiting a couple hours, blah, 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 whatever time frame we're on, to see if this resistance level is gonna be broken. Boom, market broke out, boom, 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 okay? Okay, so the market started creating higher lows. The market started creating higher lows and higher highs. And it was breaking out of these resistance levels. So remember, higher low times break of resistance equals a bullish market. Okay. So that's the market transitioning from a downward trend to an upward trend. You had a higher low, break of resistance, boom. You're gonna go ahead and go bullish. At this point, I'm looking for buys. Over here, I was looking for sells until I had that higher low, then I had the break of resistance. All right, now I'm looking for buys. Over here, I was in all buys until I got up here, and then the market came down. I was looking for maybe more buys, but then I had a lower high created, and then it had a break of the support. A lower high times break of support equals a bearish market. Once I had this break of support right here when it broke, boom, it broke. Now I'm looking for sells. Okay? As with everything, just make sure you practice these concepts. Understanding, like I said, structure. This is kind of a longer video. The next one will be maybe a little bit shorter, but I'm gonna actually get on the charts and do it so you guys can see it on the charts. We're just gonna take a break actually. I might make a part 1, part 2 video for this, but either way, just practice this. Just practice these concepts, practice understanding and seeing, just identifying. And like I said, just even at your desk or on your break or in the evening when you put the kids down, whatever it is, just go ahead and take some paper and just draw the market. I do this, like I train like this all the time. I'll just draw the market Not as much anymore, but when I was first learning this, I would just draw the market, like, in between breaks, instead of taking a nap or something like that, and just go ahead and draw the market, whatever. Just draw it out, and just see if you can't spot out break of resistance, higher low, higher high. Okay, kind of new. Okay, it made its first lower high, then it kind of made a lower low, broke out of the support level. Then I'm getting broke out of that support level. I got a new lower low, lower high. Just draw the market out. Just draw the market. That'll help you out a lot. Okay. So let's just go ahead and take a break right here. If you guys want to screenshot this, you can. Just pause the video and screenshot it whenever it looks pretty clear. But I'll leave it here so you can just look at this. I'm actually pretty proud of my work right here, to be honest. But just look at, just go ahead and screenshot this. I'm gonna take a quick little break, and then we'll come back and look at the actual chart.